What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol DM for desktop metal. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, yes, we have marked this chart up, but more importantly, we did get an earnings announcement after the bell today, so let's flip on the extended hour session and see what's going on with the number. And my goodness, without even fully zooming in, you can see quite a bit of damage has been done here. It's very likely that we will be opening on a gap down for tomorrow's session. I would just venture to point out that the anticipated open should be here around $7.50, and we'll also throw on the overnight low. Let's grab the other tool here for that, and that's going to be closer to $7.05. So really large overnight range actually, which is kind of concerning. It usually makes the opening trade a little bit more difficult to pull off. But anyways, let's talk about the framework which we will be using to navigate this trade essentially. So what I want to do is clean up a couple of levels that are close to where we need to be paying attention. So I'm going to get rid of, actually that one can stay. This is no longer really important. We chopped through that. We want to have that one on. That's good. Okay, so everything is all good here in terms of levels now. The first thing we always think about, right, whenever we're dealing with a gap down or a gap up, number one thought is always the gap and trap. And what that looks like is that if we open here, fail to take out the overnight low and trade back higher through the open, you're looking for a long-sided trade, aka trapping anyone down here who thought it was short, to fill the gap to today's low. And today's low is right at and around 8, the nice psychological number. So to me, it makes sense as a target, right? If the turnaround does happen, 8 would be your number to pay attention to. Now, again, as I mentioned, it's going to be a little bit more difficult to pull off, noting that the distance between this and this is almost equal, if not, slightly lower than what the distance is here. So your risk essentially here, your RI, is almost on par with your RW for reward, right? So a 1-to-1, it's not ideal, but it is semi-acceptable. The one situation that would make this better would be if by the time the bell actually rings tomorrow morning, the opening print can get closer to the overnight low. In this instance, obviously we do something like this, and now look at your reward, which is here, versus your risk, which is here, right? So that would make the trade much more attractive. The other thing that could potentially happen at the bell, and we won't know until the bell actually rings, would be if we open here, really just put in a small drive lower and immediately trade back higher through the open. In this case, your risk is under the low of day and your reward is essentially up here. That to me makes much more sense from a risk management perspective, okay? So those are two scenarios for the upside. The downside only comes if we get a gap and go is what it would be called. This is scenario 2. If we do this, immediate drive lower takes us to the low of day, or overnight low. We put in a bear flag or some sort of bearish consolidation, right? It could be a descending triangle, lower highs, flush the lows, and we head to the next daily support. Now note here that again, this trade is not that attractive, noting that we have a big shelf of support just underneath at 688. So the more attractive trade would be, okay, we put in some sort of bear flag, bearish pattern, whatever, we come here and then the breakdown happens, right? And you're already asking for a lot out of the stock. Note that the daily range for something like that to happen would really be like this if you're going to capitalize on the break of this shelf of support at $6.88. So to me, it's going to be a wait and see kind of thing here inside of desktop metal on both instances, both for the gap and trap, the trade higher, or the gap and go, the trade lower. The setup as of right now, again, as of right now, is just not picture perfect. It's going to be a little bit more difficult to pull off, so just be aware of that. If we come on over to the trade tab, what you'll notice to the short side, it is hard to borrow, and your put contracts also don't have the greatest volume over here. So I would probably just advise to stay away from the short side and really just be patient and not get overly aggressive to the long side if that scenario does start to pan out for lower lows or in lower highs, and then a flush of this. Obviously, you just don't want to be trying to fish for a bottom in that instance. Instead, be patient, wait to see if we can trade back higher through the open for the gap fill. That is the ideal scenario here inside of DM. It's really going to wrap up the video. If you enjoyed it or learned anything new today, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.